Let's get some insights in the news shaping the markets. For that, we welcome in Andrew Brenner with us, head of international fixed income securities at Nat Alliance Securities. Thank you for being with us. The Fed meeting is underway. What do you think they're saying?
Well, I think they're worried about what the street's anticipating they're going to cut this year. They're very happy with they've won the battle of inflation, at least in the near term. And now I think Powell's trying to get them to consider, what real rates are. And I think real rates are way too high. So I think the Fed is going to try to push back a little bit in the statement that they don't like the fact the street's predicting 5 to 6 rate cuts for 2024. But in reality, once Powell takes the stand and the press conference begins, I think Powell will show his true colors, which he's really a dove. He understands that real rates are way too high. And while he won't say the Fed's going to ease 6 times in 2024, he won't take March off the table. We still think May's going to be the first cut, and they're going to cut it every single meeting, including right before and right after the election. So we see 6 cuts for this year. And you know what? I still think they'll be restrictive. They'll be down somewhere around 4%. And I think that's good enough for now. Now, there are plenty of people. I mean, Ellen Zentner over at Morgan Stanley, I read her note this weekend. She thinks in 2025, her view is they ease 100 basis points in 24 and 200 basis points in 25. That seems a little bit much. Now you're talking recession. And I don't see a recession. I haven't for many years, and I don't see it now, even though there is a slowdown. And I don't care what the JOLTS number says today. There's a slowdown. UPS just cut 12,000 jobs. And, there's a slew of people, Nicole, that are cutting jobs. I'm hearing it amongst my son and daughter's friends that jobs are getting a lot harder. I mean, we had a friend who had a job offer from a well-respected company. They've pushed it back. Now they've pushed it back another 6 months. So I think things are a lot slower, but I don't see a recession, not even close.
Right, I see. 6 cuts. And so if they were not to do that, what's the other scenario in your mind?
Well, if they're not to do that, then there's got to be a reason. Maybe inflation ticks up sometime in the second quarter. It's not about the economy. Nicole, I look back over the weekend as to what the Fed has done, and it's not the GDP that really moves the Fed unless things are dramatic. It's inflation. Mm-hmm. If you look at the fact that they raised rates in 22 when the GDP was lousy and they kept raising rates, it's not the GDP. It's all about the peaking of inflation. Now, the PCE number peaked in July of 22, and ever since then it's been going down. And I think it's now time it's gotten down to the Fed's 2% over the last 3 and 6 month time frames, which is what Powell likes to look at. Mm-hmm. So I do think that they're going to cut. But if they don't cut, there's going to be a reason for it. Economy's strong. I don't think it means the equity market falls off a cliff. There are plenty of people that predict that. But I still see 5,000, 5,200, something like that. But I'm not an equity bull. But one thing I am bullish about is I've seen nothing but huge demand in credit products so far this year.
Right.
Our traders can't buy stuff because things are so unavailable or things are so tight. There's been almost 800 billion of new issuance so far in January globally. Even today, you look at Germany did 6 billion 30 years. And there was a book this morning, I don't know what the final book was, 74 billion of interest for 6 billion. I mean, the Greek, your home country,
the homeland.
Greece did a 10-year today. And it was, I think, 4 or 5 billion. They had 35 billion in orders. The demand is insatiable. And that's true across
Treasuries,
corporates.
I mean, aren't they pulling back on putting those out a bit? How many they'll be issuing,
I think the economy is doing strong enough that the Treasury has cut back on what they anticipated. Originally it was going to be about 815, 820 billion.
Right.
They came in with 760 billion. And the QRA, which is the quarterly refunding auctions, they'll announce tomorrow morning. And I think those will be less than expected as well. So I think you're going to see a rally. I said from Friday morning, from the PCE number till next Friday, or this Friday, I think you're going to see lower 5s and 10s lower by 25 basis points.
Yeah.
You got about 10 or 11 of that earlier today, and then the JOLTS number came out and you backed off a little bit.
Right. Tell me about China, where that fits in this story.
You know, I mean, I wrote about that this morning.
Yeah.
I mean, you know, everyone saw the Evergrande bankruptcy, court bankruptcy yesterday.
Yep.
But you know what? That's old news. But what is new news is the fact that Chinese interest rates have hit a 25-month low. They're at 247. The Chinese debt to GDP ratio is much higher than the U.S. at 288%. And Chinese, according to a story I read on Bloomberg, the Chinese individuals, investors, are trying to buy U.S. equities and ETFs and paying premiums for them because they just want to get their risk out of China.
Amazing.
So China's got a lot of issues.
Yeah.
And they're the second biggest economy in the world and maybe soon to be the third.
And it's not what we expected at this time. I mean,
No,
we
it
expected China to be in a better place right now.
Absolutely, and it isn't.
Right. Yeah. Andrew Brenner, great to see you.
Great to
Thank you
see you.
always
Thank you.
at Nat Alliance Securities.